Tax might not seem like the most interesting thing. If you had to choose between reading about tax and doing pretty much anything else in the world, that decision would probably not be hard. But tax is relevant to everyone because at some point we're going to be handing over our hard-earned money to the government. So understanding how it works and why it's important will make a difference when the time comes. In Australia, we have a progressive tax system, where the more you earn, the more tax you pay. But it's not like that everywhere. In some places in the world, everyone is taxed at the same rate, no matter what they earn. So, whether you're earning $10,000 or $10 million a year, you'd be paying the same percentage as tax. This is called a flat tax, and it can mean paying taxes a lot more difficult for some people than others. Although it's very simple, it's not necessarily very fair, although that depends on your point of view. But in Australia, our progressive tax system means that people are taxed according to how much they earn. We assume that people earning more money can afford to pay a higher percentage of their income in tax and still have plenty to live off. So for money that they earn over a certain amount, they pay a higher rate of tax. This means that different parts of your income are taxed at different rates. Some people find progressive tax calculations a little confusing at first, but once you know how to calculate your tax rate, it's actually really straightforward. Whether you earn a lot or a little, no one wants to pay more tax than they have to, so pay attention to make sure you know what you're doing. To figure out how much tax you're meant to pay, just follow 4 simple steps. 1. Get the most up-to-date tax table from the ATO website. You'll find a table that looks something like this. 2. Figure out which bracket you belong in. For example, if you're earning $40,000, then you'd be in the $37,000 to $80,000 bracket. The table tells you how much the maximum tax rate is for people in your bracket. In this case, it's 30 cents per dollar, or 30%. 3. Figure out how much you're being paid over the bottom of your bracket. For example, if you're earning $40,000, you're earning $3,000 more than the $37,000 bottom of the bracket. 4. Your tax is the amount that is listed for your bracket. In this case, $4,650 plus 30% of the amount you earn over the bottom of your bracket, which is 30% of $3,000, not 30% of your entire income. That last bit is the only part that's a little tricky. So there you have it. That's how you calculate tax in 4 simple steps. Have a go at calculating some different tax rates for different incomes. You can check your answers at the ATO website using their simple tax calculator.